Hello and welcome to Digital Transformation for Humans with your host, Amy. In this podcast, we delve into how technology intersects with leadership, innovation, and most importantly, the human spirit. Each episode features visionary leaders who understand that at the heart of success is the human touch, nurturing a winning mindset, fostering emotional intelligence, and building resilient teams. Today's conversation will focus on driving sustainable impact and expansion in the banking and wealth tech. We are going to take a closer look at the latest trends and best practices. I'm happy to welcome our amazing guest, Stijn Ceelen, a seasoned and result-driven C-level leader in banking and wealth tech, managing director, CEO, and advisory board member from Belgium. Welcome, Stijn. It's great to have you here in the studio today.
Thank you, Amy.
Let's start our conversation and transform not just our technologies, but our ways of thinking and leading. Are you interested in connecting or collaborating? You can find more information in the description. Subscribe and stay tuned for more episodes. Stan, to start our conversation, first of all, it is such a great pleasure to have you here today. I'm really happy to get this opportunity to dive deeper into the important topics and uncover what really matters in this exciting area. Could you please share with us, with everybody who is watching us today and listening to this interview, something about your journey, a few words about your transition between the corporate world and the amazing career and business you're running today? Tell us more about yourself.
Of course, Amy. So I started my professional career in 2001. I worked for a couple of established financial institutions in Belgium in different roles, also different domains like risk management, asset management, corporate strategy, institutional sales within asset management, etc. In 2017, then basically I switched from the, let's call it, more traditional banking services to a fintech called Ping Bank, which was a Dutch online broker, which was acquired in 2019 by Saxo Bank. And then I took the opportunity to move to Copenhagen for 4 years to work for Saxo Bank, and I developed some kind of online new wealth management proposition. But then basically, it was end of 2023. I moved back to Belgium. I started my own company, Alkiemist Advisors, and basically my main assignment today is that I'm the chief investment officer of a single family office in Belgium. And that was also the reason why I took that initiative, because I really want to reconnect with my passions. And my passions are trading and investing. That was one of the reasons. And basically in the corporate world, I was too much distracted by meetings, strategic alignments, but also stakeholder management, etc. And then for me, the second reason to move back is I want to have like a more direct impact on what I did. And that's also what I feel right now. As a corporate leader, you most of the time have an indirect impact on let's call it whatever the company is doing, while you have a much more direct impact on what you do as a business owner, especially if you really focus on your true passions.
Sounds amazing. And to tell the truth, I'm happy that you chose to move to Denmark for a while. Otherwise, probably would never meet in real life, and this conversation wouldn't take place. So that was a great opportunity. And for those who don't know, Sten is also head of CXO section of Brand Leadership Community, which has the headquarters in Copenhagen, Denmark. And I'm standing for the leadership of the future section. So we've been working together on that as well. To start with the latest trends and all the hottest details in the banking and wealth tech sectors, what are they? What is driving sustainable impact? I want to know it all.
Yeah. So first of all, what I want to mention is that the banking industry is quite a boring industry, and things that I'm going to mention, they're already underway for a couple of years. If you look at the rise of digital banking, for instance, it's not something very new, but also banks had to adjust to the new world, where people are fueled by a growing demand for convenience, 24/7 access also to banking services. So what banks did is, they tried to increase their digital applications to their clients. So basically, banks are much more approachable these days than, for instance, 10, 20 years ago. So that's a first trend. But of course, it's already underway for a couple of years. A quite new trend, of course, is the integration of artificial intelligence and machine learning. Most banks, they leverage this kind of technology in the most obvious space, and those are the typical chatbots, because they want to increase operational efficiency. And a chatbot is most of the time cheaper than traditional humans. But some other players, they also use AI for personalized financial advice, for instance. So they, based on artificial intelligence, they just want to see what your financial situation is, and they come with a more bespoke financial advice than in a traditional way. And some others, they're already using it in fraud detection, risk management, etc. Then the third one, but that's also a one that is already underway for a couple of years, is of course the adoption of blockchain technology. I'm not talking about Bitcoin, I'm talking about the underlying technology, so blockchain technology. But again, most of the time it's also used in corporate banking with cross-border payments, trade finance, identity verification. But of course, you can also use blockchain technology for enhancing security because it's decentralized, but also to fasten processing times. So that's also something that we see, but still it's quite marginal. It's not like a mainstream trend what you see at this moment in the banking industry. And then there's another one which is more driven by customers, clients, and that's in the space of wealth tech or investing in general, is the demand for sustainable products. So people, they also want to do good for the planet if they invest, and they're also asking much more sustainable investing products than they did, let's say 10 years ago, 20 years ago. So that's another trend what I can see. And then the last one, and that's more like an external trend, is of course regulation. Regulation is becoming more and more severe the last couple of years. But the biggest mistake most banks are making is they see it as some kind of hurdle instead of embracing it and trying to be at the head of the peloton to implement all those new rules and also do it in a positive way instead of communicating negatively to customers that again it's a regulator that introduce new rules, etc. So for me, those are the most important trends within banking and wealth tech.
That is so exciting. And I've been listening to you and thinking so many new opportunities, such an amazing outlook into the future. But at the same time, let's be fair and cover another well-related topic. What are some of the key challenges that financial institutions face in integrating sustainable growth and innovation into their business models?
Yeah, I think the most important one is, of course, the conflicts between short-term profitability and the investments that you need to do for this long-term innovation. If you want to invest in AI, it will demand a lot of money. But of course, if you focus too much on short-term profitability, because there's an earnings call every single quarter, then of course it's going to be hard to implement those new innovations. I think that's the most important one. The second one is also what I mentioned. It's regulation. So there is indeed a lot of regulation, and these regulations are essential, but somehow it can also slow down the adoption of new technologies, because part of that money is needed to be compliant with new regulation, money that you cannot use to implement new technologies. And last but not least, and I think that's some of the risks or hurdles that is overlooked a lot, is the cultural inertia. Basically, if you look at banks and most decision makers within banks, they're quite risk averse. And if you're risk averse and you focus too much on short-term profitability, there's not a lot of room to implement new technologies. Second of all, if you're risk averse, most of the time those people resist change. And of course, new technologies is all about change. But in my humble opinion, it would be a huge mistake if you don't implement those new technologies. It's the same at the beginning of this millennium with the internet. The internet couldn't be stopped. And again, banks were quite late in this digital transformation by providing digital apps, etc. And I hope they don't want to make this the same mistake twice.
Let's hope that they are not going to do it.
Indeed.
And we smoothly came to the topic of AI and other exciting technologies. Let's talk about how banks and wealth tech businesses can leverage AI and all those other powerful technologies to enhance their sustainable expansion. Let's develop this topic a little bit more.
Yeah, I think we have now to make a distinction between banks and, let's call it, wealth tech or fintechs in general. Is that most banks, they really focus on operational efficiency as a strategic pillar, although sometimes they claim something different. While fintechs and wealth techs in specific, they most of the time focus on customer intimacy. They really want to be customer centric. In my humble opinion, the use of AI in both situations is completely different. If you want to use AI as an enabler for customer intimacy, like most wealth tech companies or fintech companies are doing, then of course one of the major advantages of AI is, of course, personalization of the customer experience. And that's also what they want to focus on. Fintech companies, they just want to solve the client engagements on a specific touch points, and they really want to give the best client experience in that specific touch points. And that's where AI can do a lot of things for those companies. If you look at banks and you focus on operational efficiency, and that's also what you see right now, then you have to ask yourself, where can they make a lot of progress in terms of operational efficiency? And that's, of course, daily contact with clients. That's why you see that a lot of communication is already replaced by chatbots. And what they are doing right now is introducing chatbots driven by artificial intelligence. Because the more standard questions can be answered by AI, the more humans can do and focus on more complex problems of clients and give a more qualitative answer than before. So that's where banks can focus on. But banks can also focus on, of course, fraud detection. That's also driven by regulation, especially anti-money laundering regulation. Its AI can help a lot with fraud detection, but also with risk management. For instance, if you want to define whether a client can get a mortgage or not, I think AI can already do a lot in defining a credit score for a client and make that process much more efficient than before. So in my humble opinion, banks are really focusing on the advantages of AI in terms of operational efficiency, while fintechs and wealthtechs are more using it in enhancing the client experience.
That's a really great description so that everybody who is listening to us and watching this interview understands better what are the priorities and the strategies behind. And speaking about strategies, could you provide examples of successful expansion strategies in the banking and wealth tech sectors, or one of them from your past experience?
Yeah, of course. If I look at WealthTech, then what I can see is that, for instance, it was not even, I think it were the early adopters like Betterment's Wealthfronts. They are already using AI in defining investment plans that are much more personalized than before. Before, as a client, basically, based on your risk profile, you could only choose a couple of investment plans, but they were not really personalized. What those companies are already doing is using AI in enhancing the customer interactions, but also come with much more personalized investment plans than they did before. So that's also a positive evolution, because then at least also as a client, you have the feeling that it is your own portfolio and not a portfolio that you need to share with other people because by coincidence you had some main characteristics that were aligned, while as a person you're completely different. And that's where AI can play a very, very important role. Other examples, if we talk about AI or just expansion strategies, for instance, Revolut, that's indeed a digital bank. They also decided to start as a digital bank, no human touch. After a while, of course, they also saw that human touch somehow is necessary. Because people love people, and sometimes they really want to talk to someone. But again, they also use a lot of smart technologies just to expand their product offering, but also to expand the number of markets they want to be present in, especially in Europe. They had a huge expansion strategy, also using different kind of new trends and new technologies.
Exciting, really interesting. And thanks for sharing all those relevant and very modern hot examples. So, speaking about customer intimacy and customer centricity, how important is customer trust and engagement in driving sustainable growth in this financial sector?
Yeah. Trust and engagement, for me, it's two different things. I think the most important thing is trust. Even traditional banks need a lot of trust, because basically those banks, they have access to most important personal data points of everyone. They have, of course, they also have your money in custody. So if you're not trustworthy, then of course you know what will happen, as we saw, for instance, during the great financial crisis. Then you will have a bank run. If people don't trust you as an institution anymore, people will start withdrawing money from your financial institution. So trust, whether you're traditional, you're a newbie that really wants to focus on customer intimacy by introducing new technologies, I think trust is essential. But also engagement becomes much, much more important, like in other sectors, like retail. If you don't engage with your clients, if you don't engage with your clients at the right moments, when it is needed, then basically you will lose from those that can do that. I think that's also quite essential in building a relationship of trust. Honestly, I'm not very pessimistic for the banking sector. I know after the great financial crisis, there was some kind of fear that the Apples and Googles of this world would become the new banks of the future. Basically, they were not interested in becoming a bank. They were only interested in the data points of people. Because also, if you want to use AI, the first important thing, AI cannot work without data. That's essential. So the only thing that they want to do is they want to find ways to collect more data points from people. They didn't want to become banks. Because if you want to become a bank, if you look at the return on equity of banks, best case is between 10-15%. If you look at the return on equity of Google, Apple, it's much, much higher. So why on earth would they even consider entering another industry where the return on equity would be much, much lower? So some banks, they start to realize that, and they said, okay, there is no fear that we will, I don't know, replaced by the Apples and Googles of this world. So basically, they went really back from customer intimacy to operational efficiency. But again, they're led by risk-averse people, and they're not always open to change. So that's why I also believe that all those trends will evolve very smoothly in the banking sector. There will not be a revolution because there's no external fear anymore that banks will be replaced by other players.
Interesting. So much new information for me. I haven't been in this area, but this is really interesting to hear and learn more about it from you. What are the best practices for banks and wealth tech companies looking to balance growth with responsibility and risk mitigation?
That's a very good question. I think most banks just want to avoid that or people working for banks are again called banksters. That's how they were called after the great financial crisis. So, in my humble opinion, it's like you should embrace new regulation. Don't try to fight it, but try to embed a strong culture of compliance and risk management within the organization. If you do so, then of course you can still grow, but you do it in a positive way. It's like, okay, you recognize that regulators are right, that they really want to protect the end clients, but start communicating with them, start working together with them. Don't try to fight them, but try to find a solution how new regulation can be implemented as good as possible for the end clients. And if you are at the forefront of those discussions with regulators, then you can also implement those new rules in a more clients friendly way than they do right now. Now they see like, okay, we are obliged to be compliant with new rules, and we just make paperwork even more extensive. instead of trying to do it in a more customer-friendly way. For me, that's one of the things that you need to do much, much more. Then, of course, I'm also talking about risk management. So your risk framework should be very robust. It's like what you really want to avoid is that there are some kind of hidden risks. Don't get too greedy. If you want to grow, of course, you can also grow in a steady way. You don't have to do it with always to do it with double digits, but do it in a steady way and take into account all the risks that are involved. I think that's also a very important one. Transparency. I think that's also one of the things that people hate about banks is their lack of transparency. What they should do is they should communicate in a much more transparent way with customers and stakeholders. Another thing that you can do to diversify your risks is, of course, also diversify the services that you offer to clients. Some banks are really specialized in mortgages, but of course, if something is happening in the world with a recession, stuff like that, demand for mortgages is declining, then of course you're also much more vulnerable than when you have a mortgage business, but also an asset management business and I don't know, consumer finance business, etc. So the more diversified, the less risks that in fact you bear. And of course, that's something that they don't always do, but they should invest in new technologies and infrastructure, especially the infrastructure. Nowadays, if you look at the infrastructure or the database infrastructure of a lot of financial institutions, it's still a mess. There was a huge consolidation wave before the great financial crisis. A lot of banks took over other banks. They never aligned all those data frameworks in the back end. And now, after the great financial crisis, it's still a mess. And the first thing they should do is they should focus on data infrastructure. And if that's really in line with market expectations, then of course it becomes much, much easier to build new, I don't know, or to use new technologies like AI or even blockchain.
Amazing. I have so many questions. We could keep running this interview for another week without even taking a break. But I see that time is running fast. So, the last but not the least question: what future trends do you foresee in the area of banking and wealth tech, and how can companies prepare for them?
Yeah, so basically it's an extension of my last answer. I think if they should embrace new technologies like artificial intelligence, machine learning, but also blockchain technology. But in order to do so, as I mentioned before, they really have to focus on their database framework. It should be much more flexible because without data, artificial intelligence is useless. But the ones that are able to have a very good view on the data points they have from their clients, they can build the most amazing AI solutions that you can imagine because they have the people in-house to do so. And then last but not least, and that's something that I haven't mentioned so far, that's open banking. Most of the, I think it's one of the biggest mistakes that most banks are making is that they always believe that they have to build everything themselves, even in domains where they don't have any experience. Basically, I still remember one of the things that Johan Thijs, the CEO of KBC, taught me. It's like stick to the core and expand the periphery. So in fact, what you should do is stick to the things where you're very good at as a bank, but all the other things, try to partner with external fintechs, wealth techs, whatever companies in the periphery where they can create a much better client experience than banks can. and that can be achieved by open banking. So the open APIs, where you can also use different kind of solutions that people can help when they do banking.
Thank you, Stan. I'm so grateful for today's conversation, and I'm sure that many listeners and viewers are going to find so much valuable information for navigating the future in a more powerful and impactful way and expand their businesses and their way of leading. So, thank you for sharing your experience, your insights, and inspiring me and everybody who is listening to this interview. I really appreciate you.
Yeah, and thank you for inviting me. So
Thank you for joining us on Digital Transformation for Humans. I am Amy, and it was enriching to share this time with you. Remember, the core of any transformation lies in our human nature, how we think, feel, and connect with others. It is about enhancing our emotional intelligence, embracing a winning mindset, and leading with empathy and insight. Subscribe and stay tuned for more episodes where we uncover the latest trends in digital business and explore the human side of technology and leadership. Until next time, keep nurturing your mind, fostering your connections, and leading with heart.